Have you noticed something strange happening across the business world? Apple is spending tens of billions of dollars. Microsoft is pouring money into massive data centers. Amazon keeps expanding its cloud infrastructure. Walmart is investing heavily in automation. JP Morgan is hiring more AI engineers. Even companies that have nothing to do with technology are suddenly making huge investments behind the scenes. At first glance, it looks like they're all chasing different goals. But if you look closer, they're actually after the exact same thing. And it isn't higher profits. It isn't market share. It isn't even artificial intelligence. What every business wants right now is one thing that determines whether they'll dominate the next decade or spend it trying to catch up. Here's why. For years, businesses had a fairly simple formula for growing: hire more people, open more locations, sell to more customers, expand into more countries. If demand increased, you increased your workforce. If competition grew, you lowered prices or launched new products. That strategy worked for decades because growth mostly depended on scale, but today that equation has changed. The biggest challenge isn't finding customers anymore. It's becoming productive faster than everyone else. That shift is forcing companies to rethink almost everything. Instead of asking, how can we get bigger? Executives are asking, how can we do more with the resources we already have? That's why businesses across nearly every industry are investing in software, automation, AI tools, robotics, faster supply chains, better logistics, and digital infrastructure. These aren't separate trends, they're all part of one larger race, the race for productivity. Think about what happened over the last few years. Labor costs increased. Interest rates stayed higher than many businesses had become used to. Supply chains became more complicated. Customers became more selective about how they spend money. Growing revenue became harder. That meant companies couldn't simply spend their way to growth anymore. Instead, they needed every employee, every machine, and every dollar to produce more value. That's why efficiency suddenly became one of the most valuable competitive advantages in business. And once one company becomes significantly more productive than its competitors, everyone else has no choice but to respond. That's exactly what's happening today. Take cloud computing as an example. Years ago, businesses had to build expensive computer systems themselves. Today, many companies rent computing power whenever they need it. That gives them flexibility, lower costs, and the ability to launch products much faster. Now that same idea is expanding into artificial intelligence. Instead of simply buying software, companies want systems that can analyze information, automate repetitive work, assist employees, and speed up decision-making. The goal isn't replacing people, the goal is helping every employee accomplish more in less time. Imagine two companies with exactly the same number of workers. One uses outdated systems that require hours of manual work. The other automates routine tasks, organizes information instantly, and allows employees to focus on higher value work. Over time, the second company gains an enormous advantage. Projects move faster, costs stay lower, customers receive quicker service, new products reach the market sooner. That productivity advantage compounds year after year, and that's exactly why businesses are investing so aggressively. But technology alone isn't enough. The companies moving fastest also understand something equally important. Talent matters more than ever. As technology becomes more powerful, businesses aren't just competing for customers. They're competing for engineers, researchers, cybersecurity experts, data specialists, designers, and experienced managers who know how to turn new tools into real business results. That's why you've probably noticed companies continuing to hire in certain areas even while slowing hiring elsewhere. They're becoming much more selective. Instead of hiring as many people as possible, they're hiring the people who create the greatest impact. It's another form of productivity. One exceptional team often creates more value than several average ones. Capital is another reason every business seems to be making similar decisions. Large companies have been raising cash, strengthening their balance sheets, and investing years before they expect those investments to fully pay off. Why? Because building modern infrastructure isn't cheap. Data centers cost billions, semiconductor factories cost billions, Power infrastructure costs billions. Supply chain improvements cost billions. These aren't investments designed to boost next quarter's earnings. They're designed to position companies for the next decade. That's why many executives continue investing even when economic conditions feel uncertain. Waiting until the opportunity becomes obvious often means arriving too late. History has shown that the biggest business shifts usually reward companies that prepare early. Think about the rise of the internet. The companies that invested before everyone else gained years of experience. The same happened with smartphones, cloud computing, e-commerce, digital payments. Every major transformation rewarded businesses that acted before the trend became obvious. Today's productivity race looks remarkably similar, and here's what's interesting. This isn't just affecting technology companies. Manufacturers are using automation to improve production. Retailers are using smarter inventory systems. Banks are improving fraud detection and customer service. Healthcare providers are streamlining operations. Transportation companies are optimizing delivery networks. Professional service firms are automating paperwork and research. Almost every industry is asking the same question: how do we become significantly more productive than we were yesterday? That's why so many businesses suddenly appear to be moving in the same direction. They're responding to the same pressures: higher costs, faster competition, changing customer expectations, and rapid technological progress. No executive wants to wake up 5 years from now and realize their competitors became dramatically more efficient while they stood still. That's a risk few companies are willing to take. Of course, not every investment will succeed. Some projects will fail, some technologies will disappoint, some companies will spend billions without seeing the returns they hoped for. That's normal. Every major business transformation creates winners and losers, but sitting on the sidelines may be the biggest risk of all. Because productivity isn't becoming just another competitive advantage, it's becoming the foundation for almost every future advantage. The companies that build stronger systems today will often have more flexibility tomorrow. They'll be able to launch products faster, adapt more quickly, control costs more effectively, and respond to market changes with greater confidence. So when you hear another headline about billion-dollar investments, AI infrastructure, automation, cloud expansion, or digital transformation, remember this: those companies aren't chasing dozens of different goals. They're chasing one: the ability to become more productive than everyone else. Because in today's economy, the businesses that learn to accomplish more with the same resources aren't just becoming more efficient, they're building the competitive advantage that could define the next decade. And that's why right now every business seems to want exactly the same thing: